How's it going, everyone? Welcome back to another Solana update on the channel. Thank you for your patience. I just wasn't able to get as many videos out as I like, but I'm here on the weekend for you guys. Now, we've been talking about this macro double top quite high up, and there was a bullish pattern at the time to take us higher. It was this falling wedge over here where the two lines eventually meet, but while it was hovering above, maintaining the 200 moving average, the last time it did so, we got this new higher high, once again falling back to it in support, gave us a new all-time high. So once again, when you get down there and price is moving down into the very final bullish support, the 200 EMA, and coming into the apex where these two lines meet, very key level, previously seen that it gives a new all-time high. As long as it maintains, we have the bullish pattern there to break out, but unfortunately these bearish crosses that were forming here unfortunately led it to lose that very key level of support, validating this macro double top. Now, this is something that I was warning for a long while on the channel. Of course, nothing we want to hear as altcoin investors. We don't want to see cryptos going down, but it is just a reality. We can't just be blindly bullish all the time. And this is why I've got another signal potentially flashing. If this green box does not serve as the bottom and the best time to DCA, it could actually later develop where we see a bounce, everyone starts DCA again, FOMOing into it, not realizing that it's just pumping into previous support now as resistance. With all these bearish crosses forming, guys, we were a lot better positioned before in this area with a potential double bottom, just like you saw on the 200 EMA last time. That gave us a new all-time high. The setup was there because not only were we forming that bullish pattern, we've also got another, the falling wedge, targeting the previous highs. So we should have seen a move back to where it came from. So better position then in this area than currently. And so a move up from here, although this has to be the best point in to DCA, this has to become the long-term bottom, and I'll explain why. Because pumping back up into this area and confirming it as resistance, confirming these bearish crosses, means that we're just starting this new bearish trend, even though we've been going down from 300 to the 180, 190 key level of support, already nearly down 40-50% at that point. And then to lose it and just start something new, you need to understand that that means that this move up is just to further confirm the trend and then continuation lower, equally like we saw to the upside. We got this initial move up, it came down for key support and continue higher. Now, if I flip this upside down, well, it's dumped, pumped back into key resistance and dumped to a new low. This is what I'm trying to get at. So these are the key levels of resistance it must break through. It's also the neckline of the bearish pattern. So even a move up into there is not good enough. But of course, if it so manages to break through, recover the moving averages and put in a new all-time high, you would say this was the ultimate DCA zone. We've actually come into the macro support off of the multi-month range we found ourselves in 2024. And while in that range, every time it was in this green box, it served as a great time to DCA. So that's why we have to say it's the same here and now. However, what we must not forget is that this was macro support. We see it as resistance in the past. It needed to hold to get that new all-time high. And due to the loss, well, it must be the top now as we see dumps previously from there. So that is the risk at the moment. When we get up into here, it could fall back down into key support. And it's trying to find out, it's trying to test whether the bulls will protect this key level support. Now, why am I keep mentioning this level? And why does it have to become the bottom? Even though I'm saying, guys, it's most likely not going to be. The reason why I'm saying it has to be the bottom, this has to be the best DCA location, is because if it's not recovering those levels, we're forming an even larger macro double top, this being the neckline, the base. And so from here, even if we did reject and roll over, it just cannot lose this level. It must high low and break out to the upside. It must happen, guys. Otherwise, we're not getting a new all-time high. We're validating this double top and then confirming it as resistance to head even lower. That is the potential scenario at the moment. I will be here to update these videos and analyze it for you guys on a daily basis as of when I can. Apologies for not getting a Solana video out for the last couple of days. Just been really busy running the Discord, getting out as many YouTube updates as I can possible, but also trying to enjoy my time. Again, we're doing this crypto in the first place to have control of our time, not to be staring at the charts always. So if you want something less stressful, then just stick to Bitcoin as well. If you want to out trade Bitcoin long term, then you need to be a trader pretty much. So get in and out. And right now, this is a DCA zone in my opinion. And then from resistance, this is another get out signal or a shorting opportunity back down into support or to a key Fibonacci level. And then we need to take it from there. If this gives in, well, when I see those signals, I'll tell you guys, the macro double top is valid. Right now, it's not valid, although I'm warning of it. Right now, my expectation, what I believe is going to happen, is this move up from this key level of support back up into the resistance of the moving averages. If that fails, well, it's horrible. It's even worse than if we don't get this bounce. We have not been getting the bounces because back over here, I was actually saying we are meant to bounce because we had the bullish pattern and the double bottom in this area. What failed to allow this bounce were the moving averages, and that can definitely happen again. I've just drawn this path to the upside back to where the resistance is. This is where structurally the support was. So that's structurally where the resistance is if we're talking about horizontal levels. But we've also got moving support and resistances, and the moving support and resistances are saying you could even stop here and keep rolling over. That has been the trend. Look at this yellow one. It's just been maintaining the yellow one the whole time. So who's to say it's even going to get up there? But I'm saying even if it did get up as high as 186, 190, $200, it's still not good enough. We have to be very careful. If I saw 210, 215 broken, then I'm starting to get a little bit more excited. But a move up to that area is still not good enough, and I'm going to be very cautious about that. Don't worry, as it develops, I will let you know. Stay tuned on the channel, turn on those notification bells. You have to be subscribed to do so. So help me achieve 10K subscribers. You can help by getting more eyes on it. That is done by bumping up the algorithm, whether it's a like or a comment. Even if it's a one-liner or an emoji or a thanks, whatever it is, it really goes super far. You wouldn't believe how much it helps. That is it from me today. Any further education, if you want to learn to identify these things on your own, be aware of all the possible scenarios, but also know what path you're actually currently on. It's nice to know it can do this, if it can do that, but when we see what is currently on the chart, what is the expectation? And we know for now, while this green box is support, it's meant to run up into resistance. Thank you so much for tuning in. Again, further education can be found at links in the description of this video. Cheers.